Hello, welcome back to my channel, and are you ready to make some money today? In today's video, I'm gonna be going over not so much psychology or emotional control with trading, which is a very important aspect to trading, but the other part of trading, which is the technicals. I'm gonna be showing you guys 4 rules on how to actually place a trade, know where your stop is, know your take profit, and know your risk mitigation. So there's gonna be 4 rules I'm gonna be talking to you guys about. And rule number 1 is know your entry. That's rule number 1, know your entry. Rule number 2 is know your stop loss, know how much you're willing to risk, make sure it's managed. Rule number 3 is know your take profit, know your liquidity zones, where price could go target in the opposite side of the range, a target, right? And rule number 4, make sure to move your stop loss to break even once your trade goes into profit with the amount of risk you're risking. So if you're risking 50 points and the trade goes 50 points in your direction, make sure to move your stop loss to break even, because if the trade starts to come back and then go in the opposite direction, you don't want to get caught up in a losing trade, which is going to take away from your profits. It would be best just to have a 0-day, walk away, journal, reflect on the trade on the at the end of the day, and understand why the trade went in the opposite direction. Maybe you got in at a good point where there was going to be a reaction, but it was just a retracement to get people in on the momentum to go in the opposite direction, and you just didn't see it, right? So what I want to do is just show you guys what those 4 rules look like on the charts. So let's go. Right here, guys, I have a tool that's called a risk to reward tool going long. It's this icon. It's called the long position, and there's one called a short position. CPI just happened earlier today at 5:30 a.m. Eastern Standard Time. So this is where this volume is coming in from, right? There's a lot of volume. It already moved when news came out, 240 points, right? That's a lot of volume, right? So what I'm doing is saying, hey, there's volume coming into the market. It's coming into the market. And what I want to do is not go against the volume. It's showing us a blueprint, of a footprint of where the direction wants to go based off of news, which was, I used Forex Factory. We had CPI come out Tuesday, 5:30 a.m. It had actual good progress percentage-wise. It was a red folder, meaning it moves the markets. So you can see that this is where this candle came from, right? Now what I'm doing is I'm using a Fibonacci retracement tool from this low to this high. Now if we go to the 5-minute, yeah, it's from this low to this high. Let's go back to the 30-minute. And what I want to show you guys is, what am I looking for when I'm looking to enter a trade, right? Let's just move these liquidity lines real quick, just so that it makes it easy for me to see these things. Okay, looks good. So what I'm saying is, this risk to reward tool, the long position tool, I'm gonna have a buy limit order based off this 50% range, based off this London high. I may switch it to the Asian session high, or to the 50%, which would be 181. And what I'm gonna do is get in for the long right at this high. Let's see if this 1 hour, 4 hour, the 4 hour right here aligns with that Asian session high. So I may look to get long right at that Asian session high for 183. And what I'm saying is, price is going to come down, have a retracement to the 50%, and then go long. It could come down to that London high, 168, but if it doesn't and it starts to push off of this level right here, it's going to be a tough pill to swallow, because then I'll have missed the trade. This is just pushing, guys, probably 250 points already. But what I'm saying is, it's gonna keep, okay, at this point, I'm probably gonna get in at that Asian session high, 182, because now the 50% is above that Asian session high, just slightly, right? It is now 5:40. We have 30, 40, 50 minutes before the market opens. I have a hard lockout until 6:15, so I can't even place a trade right now. I don't want to. This is what it means to actually see what Asia and then London does prior to New York open, so that we can have an idea, right? So rule number 1 is know your entry. My entry is going to be right here. Rule number 2 was know your stop loss, 50-point stop loss. This is my stop. I'm willing to risk this much. And my take profit is right here, would be around 481 if I get in right here at 482. So it'd be 482 up here. 300 points, it's already ranging a lot. So this could keep ranging for the day, be bullish for the day. So I don't want to be bearish, I want to be bullish on this move right here, but I'm trying to identify a good area to get in. Now, let's say price does come to this Asian session high and then goes 50 points in profit. So we're at 32, it gets to 44,232, has a reaction. What I'm going to do is move my stop loss to my entry so that if price continues to come down, I don't lose anything, right? I'm getting in at a point where there's high probability of a reaction happening. There might be a reaction, but it might not be enough volume, people stepping in to go long, and then sellers are coming back in up here to then bring price down lower. So that's why it's important to move your stop loss to break even and then just respect that break even trade, so that if, you know, if it's a losing trade idea, your rule number 4, moving stop loss to break even, is going to protect you from losing any profit. Now, what I want to do is just kind of go over the 4 rules with you guys. Rule number 1 is know your entry. Make sure it's a spot that, based off your back testing and live trading, has a high probability of having a reaction off of that price and at that time. Rule number 2 is know your stop loss, whether it's an arbitrary 50-point, 100-point, you know, arbitrary amount that you're willing to risk each time you trade, or if you're willing to risk within, you know, drag the stop loss tool down. So let's say you're risking 45, 44 points, you know, make sure you have a good risk to reward. And then know your take profit. Have a spot where you know that price can go to based off your back testing and live trading, where price can go to by the end of the day, whether that's a high or low of a Asian session, London session, or previous New York session, or a previous day high or low, right? And rule number 4, once you're in profit and you're in profit by the amount that you're willing to risk, so let's say you're risking 50 points, you go in 50 points in profit, you move your stop loss to break even, so that if your trade idea ends up being not good and the trade goes against you, you're not losing anything, you're losing zero, so that it doesn't take away from your P&L at the end of the day. So yesterday I had a break-even day. If today turns out to be break-even, that's 2 days break-even. And let's say I finally have a good trade tomorrow, it's a TP4. I have another winning trade on Thursday, let's say TP3, and then a losing day on Friday. So because of these 2 break-even days and these 2 winning days and 1 losing day, I'll be at TP6. So I'll be $1,500 in profit. Now, if let's say if I had 3 losing days and 2 winning days, I would only be up TP4, because the TP4 winning day and then the TP3, the 3 losing days cancels out that 1 3 winning day. So what you want to do is respect those break-even days. Rule number 4, respect it, because those break-even days are going to help you long-term stay in profit, maximize your profit, and so that you don't give away too much of those winning trades that you're putting the time, energy, and effort to gain. So don't give back too many of those. And these are the 4 rules that I follow every day so that I can make winning trades, make specific, strategized, well with reason, risk losing trades, and so that I can have break even, no risk, no losing, no losses on my P&L, break even days. So once again, rule number 1, know your entry, know your price during your session. Rule number 2, know your stop loss. Rule number 3, know your take profit. And rule number 4, respect your break even trades when you move your stop loss to break even. Now, if you guys found value in this video, please subscribe, like, comment, and I'll keep posting more videos for you guys so that you guys can make sure you have a good understanding of what it looks like to trade, what it looks like to day trade in these markets, online markets, and to be well thought out, well in control of your emotions, and well in control of your psychology, so that you can make profits long term and be successful and get the life that you've been dreaming of. Now I'll see you guys later.